In jail, uncle's still in prison until this day. And so I got to see both sides of it and the collateral damage and what it did to family and what it did to children. And so I got to make a choice at an early age because I got to see the dual mentality of both decisions and choices. But at the time when I was coming up, it was violence, even in my household, it was drugs, all these things that were transpiring and happening. And that kind of shaped my mindset and the angle and the way that I live my life, even until this day. You come up in a 2-bedroom home with that many people, it was a lot of love, but at the same time, you feel as if that's life, right? Because my friends up the street, they were struggling the same way. They lived the same way. They slept on the floor the same way. They didn't have beds, right? And so when I started playing sports, the thing that sports did for me, it wasn't just opportunity. It gave me exposure. And so I remember the first time I went to my coach's house and I was like, man, like his kids got their own room. Like they got their own beds, right? Like they're living. They don't have to rush to the dinner table to try to make sure they rush to get the food because they don't have as many people in the house. Whereas with us, you got 14, 15 people at one time in the house, you got to rush to try to eat sometimes, right? And so when I got to experience a different side of life, I remember coming back and talking to my cousins and I was like, it's a different life out there. And they were like, what do you mean? I was like, it's a different life. Like, it's people that don't live like this, right? Like, this is not normal. And they couldn't fathom it, right? Until we were with my coach one day, and I remember he bought me my first steak, right? And I came back home and I was like, man, coach bought me a steak. Man, I got a steak, right? And I was so hyped. But what it did for me was it made me realize that people didn't have to live like that if they didn't want to. It impacted me and it affected me. I was the first one in my family to go to college. My grandparents had 16 children, right? 3 of them graduated high school, 3. So the value of education was extremely low. And when I came along and I had this dream of going to the NFL, going to college, I could have looked at my situation and said, well, man, more than half of my family didn't even graduate high school. So it's far-fetched. It's not going to happen, right? People even told me when I got to high school, and a cop asked me once, he said, man, what's your dream? I said, I'm gonna go Division I, I'm gonna go to college, then I'm gonna go to the league. And he's like, you'll probably go to cell block D1. And I was like, man, you're making a mistake. Like, I've never met you a day in my life. He's like, your family went to this school. Your uncles went to this school. I got an uncle in jail, right? Got an uncle in prison, right? And I was like, yeah. He's like, apple don't fall too far from the tree, right? And what he was saying to me was, you'll probably repeat the same pattern that they repeated. You come from the same household, right? And I could have looked at it and made an excuse and said, I'm gonna lower my standards to meet and accommodate my household, my experience, my situation, my circumstance. Or I can take my situation and my circumstance and raise my standard and say, I'm going to be an example, I'm going to triumph, and I'm gonna use my situation and my circumstance as my driving force and my fuel, right? And so never allowing a situation or circumstance to define your life and understanding that you got something inside of you that's greater than that situation or a circumstance, but you have to constantly believe it, and not only believe it, you have to make decisions and choices every single day and put you a step forward toward what you believe your destiny is.
So guys, thanks for jumping on. The last words there, you got to make choices, it's same in Forex, you've got to sacrifice shit to get the breakthroughs that you need. Yeah, so I just want to touch on that, and I posted the other day in the Facebook group. I watch a lot of him, and this literally always gives me shivers. Yeah, if you want to watch it all, it's fantastic. It's only about 35 minutes long. Yeah, Inky Johnson. So basically, he was a very, very up and coming American football player, and he had a massive injury. He made a tackle, he was knocked out, and yeah, he's got like scars and tissues removed from his armpits. He lost his right arm and stuff. And yeah, it's just makes you kind of think, right? And sometimes it grounds me, thinking, wow, how much of an opportunity have I got in front of me with Forex? Like today made £1,700, just over. I got to start thinking, wow, where was I 10 years ago? Where was I a year ago? It's you gotta, yes, it's fantastic going forward, but we've also got to just keep on grounded and just remember how lucky we are to have this opportunity, and we just got to keep at it. I know it's hard. It's definitely not easy. If it was, every single fucker would be doing it. Yeah. So I don't know what you want me to cover, guys. I can go over a few. Got 1, 2, 3, 4, 5 pairs that I'm looking at.
What have you been in today then?
Gold, mate.
Trying gold. I saw gold that had a good move.
Yeah, I just caught this upwards. So yeah, it's created some equal highs in here. Took out liquidity. Got a signature move down to the bottom. Took that out. And yeah, got on a lower time frame. I knew it wanted to come up to here anyway. And this is again me just exploring and willing to learn and keep on learning, because it could have dropped down to here, but I thought, well, am I willing to risk? I think it's about 12 pips, and to push up into my area that I wanted to do anyway. So I think, well, if it's going to go up there, there's a good chance it's going to happen now. So yeah, so it did. Yeah, any pairs, guys, you want me to look at, or actually, does somebody want to share? I'll go over these quickly, and then somebody will have to come forward and share their screen, what they're looking at. So nobody jumps off now. Don't be shy. Actually, we'll do it now. Anybody wants to come forward, guys? Don't be shy. Anyone share their screen? Or you don't have to go over it if you don't want to. Just share your screen so we can see what you're looking at.
Oh, okay. Share mine if you want.
Yeah, by the way, mate. I'll make you host. There you go, mate. You should be host now.
You see that?
Oh yeah. Yeah, you're good now, mate.
All right. Well, yesterday I was thinking, because what I struggle with mostly is the confidence of knowing where I think the direction is on the higher time frames.
Okay.
So anyway, yesterday I was sort of looking at the monthly on the DXY.
Mm-hmm.
And then I saw this bit of IPA here.
Yeah.
So I thought, well, it looks like it's pushing up, and we sort of know it's pushing up anyway. So that's kind of like an area it's heading towards. So I then thought, well, I'll look at the US Euro USD, and on the same time frame, I just marked out the sort of the high and the low here.
Yeah.
And then also marked out the IPAs.
Okay.
There. So what I'm looking at is basically, I then jumped down to the 4 hour. Let's go to the 1 hour. I think it was actually. Oh no, hang on a minute. Oh, okay, yeah. So on the daily, I was looking at, well, this is where price is now, and it's seems to be pushing up, but whether or not it just fills this bit of imbalance,
yeah,
and then heads and fills more of this IPA, that's where I probably get stuck a little bit, and maybe I need to back test more. So I've marked out, I guess if it sort of hits this, if it breaks this this high here, then could we say, well, actually it's going to go for this liquidity up here?
Yeah, 100%. So,
or it could fill this and then just come back down a bit more.
Yeah, so if you mark that range out, so see where your orange box is, yeah, at the top there, see that wick that's connected to the black line, them equal highs are there, yeah?
Here?
Your range, no, the one further down to the right, that one, yeah, up there. That
wick,
here.
Here.
That's your high, the range, and then that's your low, which is like 2 candles ago. So if you fib that, what do we get? Let's see what. Okay, so the area that you were just looking at, that you marked out around
Yeah.
1700 mark. Do we ever buy or sell below 50%?
Oh, here.
No, below. Look at your fib range.
Oh, okay. Sorry, this kill zone area. Yeah.
So look at 0.5, right, which is 50%, halfway between the high of the range, and yeah, there.
Oh,
So
okay.
if you'd marked out, I'm guessing you marked out that institutional candle, right, which is still right, but
Yep.
I wouldn't take a trade from there because I never sell or buy below 50%.
Ah, right. Because it's internal liquidity in it.
Well, yeah, it doesn't always have to be, but I
Right.
say every week, if we go into Hugo Boss, do we want 50% off or do we want 71? Look at what 71 lines up with.
Yeah.
71% lines up perfectly with that institutional candle. That's 1800 dead, key level.
Right.
Yeah, smashes right through it. See that little candle by itself? Yeah,
That one.
Yeah, so you'll get a reaction from 1700. Don't get me wrong. But for me, the key area that you know, it's, I was saying this to somebody early on. If you are in the house and you got 5 guys attacking you, you've got 1 bullet, you need to make it count, right? You know, I know you're not going to take them all out with 1 bullet, but you know, do you want a better shot at taking it from a 71%? Obviously, risk to reward will be better, or do you want to take it from the 1700 mark? No, I know which one we want. I know which one the banks want. You know, it just makes more sense there because there's a slight IPA below it, where the bigger one, 1700, that seems very balanced to me. So there's 3.
Oh, here.
Yeah, there you go. So in 1700 mark, the bigger one, yeah, there's 3 black candles that have balanced that candle out anyway. So it seems very balanced price action to me, around between 16,800 is it and 17,500.
Up here.
The ones below me.
Oh, sorry. Yeah.
There, yeah. So you've got your up, which is fine, which you've marked out, but then you've got 3 following black candles, right, which is balanced that out. So there's no IPA there. Yeah, there is where you are now, yeah. But I would imagine as it's going to come up, it's just going to give you a small reaction from there and then push back up to the 71 area and the 1800. So quarter levels and key level areas, key psychological areas, you'll get a good response from the 1800. So it's just small things like that. There's nothing wrong with the 1700 area. It's just a personal preference of where do you want to go from. Because if we took a trade from there, where we're going to target the lows, which is what 1580, yeah, 15800. Yeah, so it's not much, is it? You know, it's well that would be your first TP, and then further down, yeah, further down there, TP2 and so forth. But you've obviously marked out around just above 1900. We've got equal highs. And then also above that, around 2100, we've got another up before a down around the 2100 mark, which you've got major imbalance in there. Yeah. So that would be a massive attraction. So now you can fib from that high down all the way down to the low. Yeah, there you go.
This high.
No, the one just above. Yeah, that's your range.
Yeah.
That's what started the breakup structure. Yeah. So. Yeah.
Right.
If you fib it from there down to that low where we're currently at, we'll see what that thing is. There you go. Surprise, surprise. Look what it lines up with, 78.6. Yeah, the banks are just amazing at it. It's not just a coincidence. It's perfect, perfectly leveled, 78.6. Yeah. So
I guess because I'm in the day range, I probably want to drop down and just.
Yeah, well,
bloody hour or something.
It depends what the stop loss would be on it, what you're on EU. Yeah, so
Yeah.
you mark it out if you're happy. If that is like, no, if you mark it out, we can work it out. What's the stop loss on that if you were to enter perfectly off that 70? Is it 78.6? Yeah.
Oh, what here? Sort of that's the high there.
No, enter off the candle, mate. The up before the down. See the small one that lines up perfectly with the yeah, that one. If you enter.
Oh, okay.
Yeah, and you had your stop loss. You go. So what's that? The stop loss in pips.
5. Oh, that's not right. Hang on a minute. That's just because I've got a stupid setting.
Use the ruler, mate, on the left if you want.
44.
Yeah, okay. 46.
Quite a lot, isn't it?
Yeah, so that's too big. So what we can start doing now is start dissecting it. Yeah, so we can drop it down to a different time frame and see what's within that candle. Can we find a smaller one? Okay, so we got that one there. That one, yeah. Yeah, so we move our stop loss now is pretty much half, right? So that would be an entry point. There you go. So what's that now? That's
17. I know that's the what's it called?
30.
Where's my stop loss off? It's disappeared. I'll just use the ruler again. 14.
14, yeah. Yeah, so I would be happy with that. Yeah, so now on a higher time frame, obviously the higher time frames are better than the big daddies. Are you willing to risk 14 pips for potential if we take this now all the way back down to where we're currently sat at the current price action, down to about 1500? What is that? That's how many pips is that? That's a 40 to 1. So you're risking £1 for 40 quid, 100 for 400.
40 to 1. Jesus.
That's literally all I do. Yeah, just to get a better reward. So if I took that trade, I'd be risking 1% to potentially get a 40% return. That's nearly fucking 50%, right? So if you've got 100 grand account, you potentially can make 40 grand from that one move. So that's the whole point of you only need one trade for the whole week, if not for the whole month. It's very, very powerful. So looks like you've got quite a short list, which is good, mate. There's a lot of people who will look at like 28, 30 different pairs. You cannot keep up with them. It's just far, far too many. You know, it's like, I'm sure, yeah, these pop stars, they're fantastic. I'm memorizing words. I doubt them. They just read off books. But, you know, in concert, they've got bloody plugins in their ears. You know, they're playing the song, and no way they can memorize like 40 songs, or I don't know, whoever it is, Justin Bieber, or Take That, or whoever it is. You know, they can over and over and over and over, over years, and it'll be the same with us. We cannot do all them pairs and concentrate at new highs, new lows, the range, the fib levels, you know, what we're marking out, different time frames. You know, we've got, just looking at your chart, we've got 1 minute, 3 minute, 5 minute, 15, 30 minute, 1 hour, 2 hour, 4 hour, daily, weekly, monthly. That's about 11 different time frames on one pair that we need to start looking at. So if we're looking at, how many pairs have you got? 1, 2, 3, 4, 5, 6, 7, 8, 12, I've got 15. 15 times 11 time frames, 15 times 11 is 165 time frames we need to be looking at over a week. It's a lot, right? So, you know, just try and pick your pairs, guys, and narrow it down. I mainly just do indices, which is US 30, NAS 100. NAS 100 I've only started to do recently because it doesn't spike as much. So it's a bit smoother than the US 30. Gold, so yeah, them three, and sometimes Bitcoin. And then I've got CAD, JPY, EU, GA, and GJ and GU. So it's about 6 or 7 pairs, about 7 pairs. Yeah, so it's like, I'm not sure if some of you see my trade last week, or was it the week before? Just over 10,000 in one. That was GJ, you know, 55 pips. So if we're looking at, what is the pip count on that, on that trade?
This one.
Yeah, mate. Finish.
Why can't I see? I'll just fucking measure it again.
500.
551.
Big move. Yeah. But that's
Mental.
It's taking you 12 days, but I'm sure we'd all wait for 12 days to have 40 pounds.
And I guess it's fairly sort of legit, just because if we look at where we are, I mean, the consensus is that it is going down, isn't it? It's got to fill up all this.
Yeah, so you're on a daily now, and it's just created a new low, right?
Yeah.
Look to the left, we had fairly equal lows, and it's just broken it now. So we're definitely in a bullish scenario. But we've obviously got a lot of price action around the 1.2 20,000 to fill in where you mark early on the imbalance around that area. So, and obviously we need to take them equal highs out as well, because there's millions and billions of liquidity sat there. So yeah, it's just a matter of waiting, and how, you know, we can take one big trade, but possibly we could take some buys if we can get the right scenario set up. Can we potentially look for buys? So to get back up into there, you know, so we could be taking 2 or 3 trades to get back up into there, because we could be waiting 3 to 4 weeks for it to get back up into them zones. So what we're on now, daily, right? If you start chopping it down, the 4 hour, the 2 hour, the 1 hour, just do we have anything in there now that we can look at to potentially buy? Yes, and now straight away I can just spot its broken structure to the upside, right? Yeah, so it's, and that's that bull formation, the bull shape. But there you go, exactly where you are now. That's where I'm looking at to enter if it comes back down to there. Yeah, because anything below that, there you go, 8.6, beautiful. So anything before that, it seems pretty balanced, right? There's no imbalance to fill. There's nothing else. So that's yeah, that dominant black candle went down where it says October on your time frame, the bottom, just above that. That one there, yeah, that's been filled, right? Once, twice. You see the wicks right after it, and then like 6 candles after it. That one, and then that one, yeah, that was the right, the long wick. To yeah, that one. It's come back into it, right? Played off it and then pushed up. So yeah, that's been and gone. So we like the candles to be popped twice, right? So that's out of the game.
This is almost like a, well, I guess it isn't a fuck you candle, but it has taken out liquidity, isn't it?
Exactly, mate. Yeah, yeah. If you zoom into that, is that Asian session lows? What times are they?
It's
11 a.m. Yeah, so that was in London. So where you put your little black line there, all them candles, what time is that? Yeah, so yeah, like 6, 7, 4, 5 in the morning. That's Asia session. So typically, every time you see Asia session, exactly where you put your black line there, mate. Yeah, what's happened when London opens? Usually, it's a bit later this time. At 11 o'clock candle, what does it do? It takes all them Asia session stop losses out, and in the process, it's again mitigated out of that big black candle. The one to the left, mate, at the bottom.
oh, this one, yeah.
Yeah, so it's down and then up. It broke structure, right? Yeah, broke out of there. There you go. Then come back into it where that wick was. It took the Asia session stop losses out and mitigated. And there you go. That's literally your buy. Yeah, you bought from there. I don't know how much pips you'd be up by now. That's nearly 3.5, yeah, 3.5 to 1.
It's not working properly for some reason. What's going on? Oh well.
Yeah, no, for sure. If you start chopping it down again, you know, it depends how aggressive of a trader you guys are. So yeah, it's at 10 pips. I would leave it like that. You know, if you're happy to risk 10 pips for potential, you know, how far can we go up? If you, yeah,
Up
so
here, I guess.
there you go. Yeah, perfect, mate. You got it. Yeah, so now that's a 10 to 1. Yeah, but playing off the 1 hour, yeah, 1 hour time frame, which is great. You know, if you don't know, if you're happy with 10 pips on the 1 hour time frame, why do you need to start doing more work for yourself on the 50 and the 5 and the 3 and the 1 and just getting lost? You know, it's something that I have learned to do. You know, 10 pips is nothing. You know, beforehand, I don't know what you guys used to do, but I used to trade trend lines when I first started, and I used to have anything between a 30 and a 50 pip stop loss, right? So a 10 pip stop loss to me is very, very good. Yeah, so anything under 20 is manageable, is reasonable, really. Gold 20 is fine. The GBP pairs, you know, just allow a bit more for them. Yeah, that's a good trade. That's a 10 to 1. So if that came in plus the other one, the 40% one, that would be 50% in however long it'll take. You know, so well, we're halfway already, right? So if we would have taken that trade, it looks like it's kicked about yeah, about halfway. So we'd be up roughly what 4.5% now. It's on a little bit of a pullback. So where your purple line is across 16,100, I think there's a down candle there before it's pushed up again. The further down, mate.
Oh, this lot, this one.
So you go right a bit. Keep on going. Keep on going. Keep on stop. That one. There's a down there. Obviously, it's pushed up. So that the price could come to there now and push back up again. Yeah. So,
Right. Yeah. Because we're this is the order flow now, isn't it?
yeah, mate. Yeah.
So we're just basically trying to look for buys up to, I mean, if you're basically, so if your theory is that if you've missed this buy, obviously your theory is that it's going to come up to here anyway, because that's part of your trade plan, isn't it? So, okay, sod it, I've missed a buy. It's done the same thing here. It's taken this liquidity a little bit. Yeah, okay.
Yeah, it's just they say, right, the what is it saying? The bears take the stairs and the bulls take it through the window, apparently. So the bears are pushing up. Even though I don't really understand it. It's a daft saying, but apparently but the bulls are more aggressive and they drop the price through the window. So even though the bulls are bullish is upwards, they throw the bears out the window. So because usually look slightly to the left, you can see the big black candles coming down quick. Yeah, it's always the same. If you guys have not noticed, when price comes down, it's a lot faster than price going up. Look how slow it's going up. Yeah, so it's the saying. I'll have to look at it properly, but that's the kind of saying. The bulls, yes, we're bullish now, pushing upwards. Yeah, but as soon as we get to the top, the bulls throw the bears out the window, and that's why price goes down so quickly. It's always the same. So about 76% of people will sell rather than buying in Forex. So naturally I prefer selling than buying. I'm not overly keen on buying. It's just a habit, I think. Yeah, cool, man. That's just that's the same pair, isn't it? Yeah. So
is there anyone else who wants to have a chat? I've taken up a bit of time now. Anyone else?
Yeah, we can look at. Or just type it in the chat, guys, if you're any subject or topic you want me to look at. If you don't understand imbalance, this is what these calls are for. Please don't be quiet. If you're too shy to mute yourself, just drop it in the comments. If you want to cover imbalance or internal highs, remorse candles, market structure, order flow, confluence, it's anything. Okay.
How did you find your pairs, Jason?
Say again, mate.
How did you find your pairs, one that you most liked?
How I find them? CAD JPY was. Wait, let me just try and. Have you come off a host, Bruce? Oh yeah, you have.
Yeah, I made you host now.
Thanks, mate. Yeah, so CAD JPY has always been my baby. I've always since day one had good results with it. So yes, I've lost with it, but so that's just been kept in there. The Euro USD follows the DXY. The EN, I don't really follow that, to be fair. GA, I've only just added that like last week, to be fair. It follows price nicely, but it's very, very, very slow. So I'm just still waiting for it to come back up to this area since when 24th of August. So I don't really trade that. GU again follows the DXY. So I absolutely love gold. So they work hand in hand with gold. Obviously, GU and XAU USD and EU. They all obviously end in USD, right? So they'll do the opposite to DXY, and they pay a lot better than other pairs. So GU and GJ, the pip count is a lot better on them on these pairs. So EN, I'll mark them out. So GU, GJ, EU pay the best on Forex pairs, basically. Yeah, so if you all started with a 0.5 on every pair, you'll notice, yeah, the drawdown in these is more, because obviously it pays better basically. Obviously, yeah, bigger drawdown, but bigger returns as well. Yeah, so GU, GJ, EN, CAD, JPY, and gold, NAS 100, US 30, and oil. These are lethal, but they pay absolutely insane. Yeah, so and they move a lot faster. So, for example, like US oil, let's say. So let's go to daily. So let's just go from back to there. So no, sorry, I did this wrong. Let's just go from there to there, to there. Yeah, so in 45 days, yeah, from that low to that high, we've done 1,664 points. It's the same thing, points and pips, right? 16664. So if we now went over to, let's say, GA, right? So we need to mark out 45 days, right? So from there, to 45 days, takes us to 45, 44, what there? Yeah, so same amount of time, 45 days, you can see here. What's it done? 529 pips. What was oil? It's more than triple, right? 529 or 1006. Yeah, just above triple. So it pays a lot more, it moves faster. Yeah, please be careful that it's very, very, very fast, very volatile. It will whip you out. It literally doesn't give a shit about nobody. It's lethal. US 30 is the same. Just be extra careful with it. Just give the stop losses that extra that it needs. But yeah, it's no different to trading any other thing in the smart money concept way. It's still the same concept. They're just wiki bastards. You know, it's wicks and they wick you out. They're lethal, but when they work, it's fantastic. They work well. So that's, I've just got it over time, mate. Just chopped and changed what pairs. So CHF is totally out the window for me. Absolutely hate it. I do far too slow. Euro GBP, you know, for example, this is literally laughable. Euro GBP. So if you guys trade this, so pretty much since there's a big drop there. So since February, what we've done, just stayed in that range since February. Yeah, we had one big push up there, maybe one down there, one down, one big there. That's it. In the space of what's that? February, what, 8 months, 9 months. It's absolutely daft. It just doesn't move at all. So we go from high to low, 255 pips. That's even worse than the other pair. 38 days. 38 days. What we're looking at 45 days early on. So yeah, stuff like that. You just eliminate what you don't like, what you get losses with, what pair you fall out with. Oh, fuck that, take that off. You will naturally like different pairs. You'll gravitate more towards different pairs because you understand them a lot more. You understand what time they move. You know, I'm getting pretty, I wouldn't say comfortable, but I would say a lot more understanding with gold. For example, I know it moves around about 300 pips every single day. Yeah, it does its major move at 2:45. Yeah, between 2:30 and 3 p.m. every single day. It has a big burst. Lance said something in the chat, didn't he? When using the fib, do you just mark it from high to low? Yes, Lance. So it's the most recent high to the low, mate, of that range. So here we've got this high No bloody thing. That high. It's that low. Okay, so 79% there. You can see that lines up with that. Yeah, so this has been popped once from our needle. This is our blue. The needle has been popped once. We like to see it being popped twice. Okay, so we're waiting for that to happen. Yeah. But sometimes don't get used to it. But sometimes if it doesn't fit, you can adjust it just to see, whether it does fit in there well. But I just think, well, you're just trying to force it now, and I had to do that in the start just to understand, well, where do I go from? Do I go from here, or do I here, or this one? It's just experience really that comes with time. It's where do you start the fit? But yeah, usually the most recent high is the low. Okay, high to low, and obviously then we get the fib is a retracement, right? So obviously the whole point of it is this level here is 38, pulls back to a 38. Usually we see a 38. It's called a continuation, so up to 38 and then drops quickly. I wouldn't trade it. It's a very, very fast moving pair or chart. If it wants to do that, it'll just pull up quickly and keep on going, pull up quickly and push down again. But also the deeper the retracement, the better the deal we get, right? So we got it's just literally sat around this golden pocket at the moment, 71. Yeah, but can I get it higher? Yeah. Do I want 71% off my new Lacoste trainers, or do I want 79% off my new trainers? Yeah, so it's just a matter of waiting time, and that's the killer. It's horrible. But, don't go diving in.
Yes, how's it going, mate?
How you doing? You okay, mate?
Good, aye. You trading Bitcoin off this with bankers?
Yeah, not much, mate. It respects it very well, though.
Was it?
Yeah, and Ethereum. I think there's going to be a massive crash soon. Yeah, there's. Do you guys follow Robert Kiyosaki at all? Oh, he's very well known. He's heavy into Bitcoin. I mean, well into the millions. So people are talking about a drop all the way down to about 9,000 for Bitcoin. I didn't quite believe it. I think, wow, we were talking 1 point up to 100,000 by the end of the year. Now we're looking at a pullback to what? Pretty much half, or nearly half, 28,000 or 22,000 or even 9,000. Yeah,
can't see it.
The American banks are literally printing more and more money. It's just fake money. Yeah, it's not fake, but they're just pumping it and pumping and pumping. There's going to be a massive crash soon. Yeah, and if you go onto YouTube and start looking at stuff, you'll see a lot of big players saying, well, the crash has already started. It's starting to pull down already. We'll get a push up into here and drop. Yeah, there's a lot of imbalance that need to be filled. Yeah, whether it's going to happen, we really don't know. But there's people out there saying it's definitely going to happen. The United States dollar, the USD, the dollar, they've printed like 79% of all their money since COVID. Yeah, so however amounts of money of United States dollars there's in America, let's just say it's 100 million, or it's a lot more than that. This is 100 million. They've printed 78 million of that since COVID, because they're just trying to catch up with debt. So people are saying, well, it's going to be a massive crash, and then cryptocurrency is going to be the new currency is going to take over. It's absolutely crazy to think. It's absolutely mind-boggling to start thinking ahead, thinking, wow, is it actually going to happen? Obviously there's a lot worse things have happened. Are we going to lose our United States dollar and crypto is going to take over? Obviously people are thinking about it. A lot of people are talking about it, but who knows? It's looking at the chart. It's possible. These pullbacks. If we're going off bankers, which it does respect it very nicely. It could well happen, but it's just a matter of time. I'll try and find the video for you on YouTube.
It was just a couple of days ago, wasn't it?
Yeah, I think so, mate.
There's quite a few people saying it's going to go to 100,000 before it drops.
This one. Yeah, this one.
Yeah, if you follow a guy on Twitter called Plan B, he's been really accurate so far. He's been
bang on to the $1,000 for the last 2 months, hasn't he?
Yeah,
And
I watch quite a lot of crypto stuff, and
yeah,
I can't see it going to the levels you're talking about. I'm happy to be proven wrong, but all the main guys I follow with their analysis is saying it's heavy bullish now.
Yeah,
Well,
yeah,
Q4 is usually the most bullish quarter
yeah.
of the bull run. So the different people I've watched have said that we're going to have the high probably in November, run into Christmas, and then crash January, February.
Right. Okay.
But whether that's right or not, no one knows for sure, do they?
No. Yeah, it's.
Dad, poor Dad. Robert, good to have you back with us on Kitco.
Oh, thank you, Michelle. I appreciate your being part of your program. Thank you.
Well, we appreciate your insight, and we want to get those insights on this October crash. Secretary Yellen is warning that if Congress doesn't raise the debt limit by October 18th, that there'll be a financial crisis, a calamity, as she calls it. Is this what you think will trigger this October crash?
Well, I think it's already been triggered personally, because after I posted that market crash, the S&P 500 is really the S&P 7, and it's being held up by Treasury Secretary Yellen and Powell. So there's no correlation between the economy and what Yellen and Powell are doing. Now, I say one more thing is that I'm a little strange in that I like crashes. So this next crash is going to be really, really good, but it'll bring down gold, silver, Bitcoin, stocks. But the good news is a crash is a good time to get rich. So that's why I'm optimistic, and I'm very optimistic on gold, silver, and Bitcoin, not on stocks.
All right. Well, let's first focus on the equity side of this crash, and then talk about gold, silver, and Bitcoin. So what do you think essentially really triggers this? When you say crash, how many percentage points are you talking here? What do you anticipate?
Well, the big debate is there inflation or deflation? And if you look historically, what's happened today is the nominal debt to GDP is a correlation of M2, the volume of money, times the velocity of money.
Right.
And the reason Yellen and Powell are scrambling is because they've expanded M2, so everybody thinks there's going to be inflation. But velocity of money, which is what Jim Records and I always talk about, the velocity of money is plummeting. People are not spending. So they pump all this money in, prices go up. Meanwhile, the Asians are catching up now. The ports are finally open. So it is transitory inflation. But the problem is we're stacked with this massive debt, and all it's done is bump up the stock market and real estate market. The money has not gone into the economy. That's the sad part. So the rich get richer, but the poor and middle class are getting poorer. It is tragic what's happening today.
So what sets this off? Do you anticipate that there won't be some kind of way to raise the debt ceiling come October 18th?
Well, they can do all they like, but I just said again, it's M2, which is money supply, times velocity.
Right, but what's the trigger? What is the trigger that all of a sudden destroys investor confidence, which is already a little shaky at the moment when investors really look at the fundamentals? But what's the trigger that really shatters investor confidence in the equity markets?
Well, I don't know what it'll exactly be, but you can't keep printing fake money. That's M2. And the velocity of money keeps dropping, but the debt keeps going up. So you and I don't have to go to Harvard to understand that's not good. So they're just going to keep doing the same old thing. And meanwhile, that's what we're doing today is actually going to kill the economy too, because you and I are now on, let's say, Zoom. So
Yeah, this guy's worth 100 million. So he's an author originally. He's the guy that wrote Rich Dad, Poor Dad, the book. He's heavy into Bitcoin. I don't know how much money he's got in there, but yeah, he's convinced it's going to make a massive crash. If you want to watch it all, I put the link in the chat, guys. But yeah, who knows? It's October 18th, he said. So it's, we'll see what happens, right? it's very hard to know what's going to happen and who to believe, right? But like he says, you know, they keep on printing money, but the debt is rising and rising and rising. I think there's a US dollar printed.
That's the good thing about trading, though, isn't it? It doesn't matter where it's going. We're just jumping in and out for the leg, aren't we? So it doesn't matter to us.
Yeah.
Short term, whether it's up or down or whatever.
Yeah, there you go. So almost a fifth of all US dollars were created this year. That's 2020. That was about a year ago.
Stock
Mad,
market
isn't it?
crashes are often in October, aren't they?
The 22% of all the money circulated in US dollars printed last year. So they just printed money for fun, right? But the debt is still going up. It just doesn't make sense. Because there's a website somewhere else, try and find that. It shows literally how much debt. It goes up like, oh, it's stupid, millions amounts every second. You can find it. It's like a calculator online. Anyway, back to the charts. Yeah, but Brian, that's your answer, mate. Yeah, I do look at Bitcoin and Ethereum as smart money, mate.
Yeah.
Yeah, it respects it very well.
Oh, you said you this white candle business. You paid for that indicator, didn't you?
Yeah, it's called Order Block. Somebody messaged me last week saying they actually were in touch with the company, which
No, I emailed them and they never emailed me back.
did you not?
Yeah.
They said they actually did get through to them and they got a reply and they said that it's online to be bought, but this is the company I got it off. Try their Instagram maybe, or do a lot of YouTube videos. So just maybe try and comment on the YouTube videos. That's Momo, the guy that runs it.
What's the benefit of the indicator, Jace? What's it looking at?
Nothing, mate, really. It just identifies your up before the down, the candles engulfing ones. So
Yeah.
I'll just turn it off. See the white block there, I'll just turn it off. It just
Yeah.
helps the eye, mate. You know, it's it just identifies all of them that has been engulfed. So any candle that's been engulfed, the one obviously that has been engulfed will come up white. So it just makes it easier to mark up your institutional candles, right? This one here, down before the up. See, that's engulfed. That's what we're looking for, right? Engulfing candles. That's the two candle pattern we're looking for. So I'm waiting for it to come down there. Sorry. So this hopefully will be a nice trade. So CAD JPY, 2 hours. So the 1 hour, obviously we can see here. This is candle size of 28 pips, slightly too big. Start chopping it down. 45 minute gets a bit smaller. Yeah, so now we can just notice 45 on the 45-minute candle. There's nothing come in here, right, to mitigate out. Yeah, these have come into the wick of this, but ideally we like it to come into the body, right? Yeah, so just a matter of time. 30 minutes, still pretty much the same. 15, there you go, bam. Yeah, that's what. And again, am I happy with 11 pips? 7 pips, yeah. 7 pips stop loss above the wick. You know, if you want to be very, very aggressive, you can go above the body, 4 pips. Yeah, so this trade is a 45 to 1 risk to reward. Yeah, so it all depends. There should be no reason for it to go up here, because above there, because this was the equal highs. That was the fuck you candle that took out this liquidity. So now we just trade what's in front of us, right? This area here. Whereas beforehand, I was looking at something up here. I think it was up there. But just be careful that people don't use that as a break of structure. It is in theory, but it's not meant to be classed as that. It's just the liquidity wipe, right? So now I would be wanting to see, ideally, for it to break below here first. Then obviously we got our break of structure back up to there and drop into where? Yeah, down here, because that was our last down before the up move, right? So we just have to, it's somebody used analysis last week and I quite liked it. It's a bit like Tarzan, right? We all know Tarzan swinging from one tree to the other, right? And back down to this tree. Yeah, so we just got to understand where we want to go, where we want to be, where the banks are going, where's the banks in drawdown. If you guys watch, what's her name, the Australian bird, Jenna, she's mad about where's the money, right? Where's the money? Where they draw down. So something I've just spotted and missed. What's this, guys? Internal. No. Yeah, so that's not your range because it didn't start from there, right? This move did not start from there. Where did it start from? From here.
Jason. I don't know, mate.
Yeah.
You going back, Jenna, where'd you get onto her lives, mate?
They usually should be pinned in here somewhere, because
I know there's like pin stuff. Yeah.
is it in here? Where's the pin stuff? There. Pinned. Sure, it's here. There you go. They're all here. Mate.
Yeah, I've kind of gone through all that recorded stuff. But does she do live sessions on a scheduled basis? Or?
Yeah, very, very echoey. Is it just me? I can't even hear you. Did you say you watched all these?
Yeah, no, I've watched all those.
Okay.
But does she do live?
She'll
not a specific educator, is she?
No, she's live on a Monday as part of Trade House, but you need bounce back to get access to this. I believe.
Yeah, okay.
I tried to get on it and I didn't have much luck. They're like, show us proof that you're part of it. I think ask Connor, maybe he's got a link for this direct. I don't know. Yeah, I tried it. There she is. Yeah, so probably been this for ages. Yeah, today. Yeah, so she was on today. Monday and yeah, there you go. Monday and Thursday she's on.
Monday and Thursday. Right.
Eastern, so British time, 11 a.m. our time.
Okay, cool. Cheers, bud.
No problem. Yeah, so what time are we on? We've got about 10-15 minutes left, guys, if you want.
Go and stick your fib settings up, Jace, just to have a check.
Of course, mate.
I've got a few different fibs saved, so I want to make sure I've got the right one for doing bankers. I'll tell you what, I'll just take a picture of it.
So the 89 is just an 88.6. I just rounded them off, and then 79 is a 78.6 rounded off to 79. Literally like 1/10 of a millimeter between it.
Sweet, cheers.
Yeah, no worries, Bruce. Thanks for jumping on, mate. Yeah, so I don't know if you guys trade this, but look how this is. I love this. Look how this is just literally so beautiful, right? So it's obviously up, broken structure, clearly broke structure, left a lot of imbalance and clearly needs to come back up. Yeah, the fib lines up perfectly. So from the high to the low, that peachy orangey color there I marked out is here. That's obviously between my 79 and 89. And then I can just delete my fib. Yeah, so here I'm just waiting for it to come up here. 5, it's quite a big stop actually. The 15, that'll be more ideal, but it's been mitigated out once. But you just gotta wait up when it does come to this area and see what happens. That's NAS 100, that's the indices gold. Waiting for oh yeah, here. There's something in here I was looking for. There you go, 3 minutes. 3-minute candle. I won't take this now. It's too late to start with. Yeah, it's not the best. It's not great. It's not clean. But just going back to the DXY quickly, you know, talking about Bitcoin and stuff. So we could be looking down, coming back down to here, which if the DXY comes down, the USD pairs will push up. Okay, so GBP USD, if it ends in USD, it does the opposite to the DXY. No worries, Ash, thanks for coming on, mate. Yeah, so Euro USD, gold XAU USD, silver that is XAG USD, Euro USD, Bitcoin obviously, and Ethereum USD. They all do the opposite to the DXY, the Dixie. Okay, so it's always very important before you start trading, look at the DXY to see what it's doing. If you're trading USD pairs, CAD JPY, this would be a nice trade if it comes in. If this comes in, that'll be me done for at least till the end of next week. It just literally takes you one trade, right? Nice setup. Yeah, 4 hour. You've got a 4 hour here. Yes, we got that one and that one. Yeah, but we just remember we've got to trade what's in front of us. What do we see? What's the first roadblock? Yeah, this is the first speed bump. We need to get over this one. Yeah, if it doesn't respect and push off, it is what it is. We lose 1%. We go to the next one. Yeah. I would say it's either this one or this one. Not overly keen on this one because it seems quite balanced, right? The wicks come back into it already, and this one's come back into it as well, into the body, touched it. So if this one seems more open. As you open, it's nothing has come into it yet to mitigate out of it, right? This one's the same. There's IPA below that one, protecting it, below that one, protecting it. So again, set your alarm. Just wait. That's all we can do, guys. Yeah, just see what happens. This will be a 8.6 to 1 or tighter top stop loss 15 to 1. Yeah. So I'm guessing all you guys in time want to go for 100 grand account. If you're playing with 100 grand, obviously, if this comes in, that's 15 grand made. If this one comes in, still 8,600 made. Yeah, if we're risking 1%, that's potential gain. 8.6 or 15.
So see that top one there, Jace, that the top, yeah, there's no IPA area there, is there? But
there's a slight one. See here, between there and there.
All right, yeah.
Yes, it's just going off the fib again, which it could very well be that one, mate. It's just we just got to make it more probable with our confirmations, right? This one lines up perfectly with our which 79, 89. This one around 61.8, not great, but we just got to wait and see what happens. You know, so ideally, what we want to see when it does come up to there is the price will do that. We'll see wicks like this, similar to this. So see the wicks exhausting. You know, when you price action there, price action to be shown as exhausting. So it's obviously trying to push up, but it's failing, right? Trying to push up, it's failing. Trying to push up, but it's failing. Obviously showing signs that sellers are kicking in. Yeah, so ideally what we like to see is price comes up into here, and then we slowly get it rounded off. Yeah, and there's nothing wrong with waiting for it to create a new institutional candle here, break away, come back again into here, and then sell from this point if you want to be super careful, super confident. Yeah, so rather than going off this one, you can identify the next candle. Just waits for it to do the same again, basically. Okay, so I'll do it properly. So we've got this candle here, right? So if we come to the black line and we get what would that be? That would be the up, right? So that would be green. Yeah, and then we get a nice engulfing red candle away from it. Yeah, so now this is the same as this, right? Up for the down. Now this is up for the down. What we're waiting for now? Back in to this area, sell off. Yeah, so I would like, what you're looking for is the body to close below this body. Yeah, so if obviously the body closes above this body, and then we've got a break of structure, and it's no good to us. Yeah, if it ever closes above the body, the wicks are fine. Yeah, so if you ever see a body like that, the wick could literally, Jesus, if you do that, the wick could literally do like that and come back down. So it's the most important when a body closes. The wicks is just a distraction from true price action. The body is the most important part. Cheers, Darren. Catch you later, mate. Thank you. Yeah, so we just need to analyze it again. Something that comes with time. I've learned. I don't go jumping in anymore. Ideally, I like it to come up to here, accumulate, distribute, accumulate for a little bit. Yeah, whether you're buying sells, just so obviously if it's pushing up, it's going to push up and up and up and up. Obviously, that's this a candle is then no good, right? So if it stays there for a little while, not too long, anything between like half an hour to an hour. Yeah, you know it's too tight to keep on pushing, right? Yeah, it's just stopped here now. It said, look, I'm at the top of the fucking 86th floor. I need a way back down. So now it wants to start pushing down. As soon as you see break of structure, even on a smaller time frame, 1, 3, 4, 5 minute, yeah, break of structure, comes back into that candle, sell it or buy it, obviously. Either way. Yeah, so it's just a pattern that you need to grasp. Yeah, it's just that small little pattern. It'll come like this. It'll stay there a little bit and then just fade away. Yeah. EUGJ. This was beautiful. I don't know if it's an amazing trade. This was. In the process, what we've done, we created new lows. Yeah, a major imbalance in here, waiting for a price to come back up to there. Our fib zone lines up. That move broke structure. Yeah, so that's important as well. Because if the banks are pushing price down hard, obviously it means there's money in there that the banks need to come back and mitigate out of there. So it broke here, it broke to this structure, obviously pushing downwards. Yeah, ideally we'd have liked for it to break here as well, but still, if we can get a trade from there back down to these lows, that would be another 280 pips. Bearing in mind I made 10 on the 55 pips. So last week, yeah. So it's still a big move, yeah. And usually what we'd see is this move hopefully will take out these lows anyway, yeah. And then we've got a target somewhere. Yeah, so we've got imbalance in here. Yeah, you guys can see that balance there. So we could be targeting that. A tiny little candle, yeah, imbalance in here. Yeah, tiny little candle there. There's plenty of stuff down here. Yeah, that's the weekly. We go on to the weekly 1 week. Look at that massive candle there. So this is screaming to me, yeah, to push down. Look at that, same thing, same shape, right? Like a ball shape, upside down ball. Yeah, if we're buying, obviously we want to see that sort of shape. Yeah, obviously here we're trying to sell. Obviously, that's what we want. It's starting to round off now, isn't it? So for us to get in on this would literally, if I caught this from here all the way down to here, that's that 1,170 pip move. That's a massive move, that is. Yeah, but obviously look at that, a huge massive candle there waiting, screaming there to be filled, to come back to mitigated. GJ, GU, it's pretty much the same, pretty similar. Again, that broke structure, right? Not this one, this one. This was our most current recent low. And that was a high, so that was a range. And that's what broke out of this range here. It's come down, imbalance needs to be filled, liquidity is sat there, people's stop losses are there. We do have this one here, so again, we obviously need to go off the most recent, right? So we just got to play off it. And this is the only thing I still struggle with is, well, if it's not this one, it's going to be this one. If it's not this one, it's going to be another one. But we just got to play off it, what's in front of us all the time. Yeah. If it obviously needs to mitigate out of there, we've got imbalance in here, balance, a lot of imbalance was pretty much been filled. That's GU. So we do have internal high here. We've also got our fib level here, which lines up perfectly with this candle as well. So, you know, and this comes back to what me and David do. Take, if it's not going to be this one and it wants to be this one up here, we can possibly take 20, 25 pips, 30 pips from this here, because you will get a rejection. I'm super safe, confident. We'll get some sort of reaction from there, even if it's like that, and then up to there, and then the big drop. Yeah, but we just have to be adaptable, right? We just don't go jumping in, because if you do get it wrong, you know, it's just going to take you out with your stop loss, which is not the end of the world as long as you're using correct risk management. Yeah, but if we get a nice reaction from there, 20, 25 pips, 30 pips even. Yeah, so it's going to be well into the thousands with a nice account size. Lance, would you want it to come into your entry added twice before taking a trade, mate? Not always, mate. Some educators don't actually like the trade coming in back in twice, because they say it's trying to push through. Yeah, so if you can catch the first one, great. But what you usually see is it does that, it pushes off. And like I was saying early on, when it does leave a candle there, yeah, it'll come back up to mitigate out of that one again. And if you move your stop loss to here, right, or stop profit even, it does take you out. Not the end of the world, you still made money, but just again, being adaptable, just make sure you're recognizing that and get a second entry. As long as that body, remember, closes below this body. Yeah, so we've got this here, this candle here. This body needs to close below this one. Even if it's a one, the smaller time frame, just make sure it's closing below that body. And this one needs to be closed below. So it's market structure, right? Otherwise we're getting breaker structure. Then we're out of the trade altogether. It's not valid then. Yeah, ideally, well, not ideally, but I'd say 90% of the time it does pierce it twice. Yeah, so it's not the be all end all, but my guys, been on for over an hour and 10. Unless you've got any questions, I'll stop it there. This will be, it is recorded, so I'll put it on YouTube if you're going to watch it back again. I think that's it, isn't it? Yeah, GU, GJ, EU, CAD, and gold. With 30. High, low, trading range, internal high. Yeah, that is hiding there. So again, you'll just get, these are just reaction points. We just need to try and identify which we don't ever know. We just need to identify which one is the one that is the one that we need to play off, or which one the banks are playing off. Yeah, me personally, I'd go for that one. Why? Because there's imbalance in front of it, protecting it, making it more probable. There's nothing so far come to it to pop it. This one, that wick has come back up, it's cleaned the price action, right? Yeah, so this one here, this wick has balanced that price action out there. So we'll see. Just again, it's just a massive adaptability game, and that imbalance is just them candles have filled that imbalance in there. So yeah, that one's more probable to me, but we literally never know, right? That's the annoying part. Right, thanks very much, guys, for jumping on. Anything you need, please send me a message.
Cheers, Jess. I'll catch up with you, mate.
No worries. Take care, guys. Bye bye.
Cheers, thank you.